Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Well, what's on everyone's mind is when interest rates will start to head up. And of course, that's been on everybody's mind here for how long? Going back now, it seems years in terms of the low level of interest rates. So every meeting I attend, people are sitting there saying, when will they head up? Most people are expecting that, say, June of next year, 2015, that the Fed will start to push up rates. But when we look at things in terms of where they are right now, is that we go to the 3-month coincident index that we watch from Fed Philadelphia. And when we look at that, is that in May, up 0.9%. June, up 0.9%. July, up 0.9%. Once again, this gave us the clue in the first quarter that the negative GDP that we saw was incorrect based upon the overall economy and was skewed too far the other way. When we look at how GDP then moved up in the second quarter, once again, we question how sustainable that is based upon the actual economic results that we've seen across the country. So when we think about that, is that question mark in terms of when do we think interest rates are going to head up, is that it suggests no time soon. So the economy just continuing on in that low to moderate pace. When we look at what has happened in Europe in terms of their GDPs actually heading into the negative territory because of the situation in the Ukraine, my feeling is that just continues to keep pressure in terms of that low to moderate type of growth. So when we think about it from the standpoint of longer term rates, and look at the 10-year Treasury in here and look at it being right there hitting a 240. We have been lower in here than a 240, but think about where we were here at the beginning of the year. When we crossed over, it was 3%. And as we've moved down through the rest of the year, we've just continued to head down in terms of that 10-year Treasury, hitting a level that really goes back all the way to last summer. So when we think of that in terms of that momentum, in terms of people thinking that interest rates are going to head up, is that this would also indicate from the bond hawks that they don't expect interest rates to head up anytime soon. In fact, maybe we'll see the 10-year Treasury continue to decline. So when we look at that question mark, is that we need information as community bankers that will help us lead through the cycle. I think many of us hope that interest rates are going to head up to relieve pressures on our margins. But as we pointed out in previous webcasts, is that actually the margins have begun to improve based upon the Seafried and Brew national benchmark. So improve to moderate, that still we're able to thrive during a very difficult time of these low interest rates. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.